Hey everybody, Crash Alton on June 6, 2024, 1800 hours Pacific Standard Time. Hey, we're doing a training session in the Impact Trading System voice channel. We have several new members here. We're going to do a training session. We're going to record it so that members that are over in Europe who are here and can't be here can listen to this training. So, all right, we're going to do a training session for new people, particularly on Isnipe. We can get in, depending on how long it takes, we can get into some other discussions that people may have questions on. I've asked one of our relatively new but still experienced traders, MW Trading, to just give his thoughts in 4 or 5 minutes here on what his experience was before and how he uses the Isnipe system compared to another ATR style system. So, Matt, you got the floor.
So I had worked with and done a brief mentorship with Scott Bolsini. He's a trader who used to work on the CME exchange up in Chicago. This was back in, I believe it was early 2000s. So it was really before all the big tech stuff really became mainstream to the public and to the retail trader. So his strategy and what worked really well for him was seeing order flow that came directly out of the data that was fed into the exchange. So in kind of layman's terms, he could see where the big players were, where they were adding size, where they were taking out the retail traders' stop runs. He could see where orders were being stacked. He could see where absorption was taking place in the market. And that gave him the edge to be able to more or less act as a barnacle and kind of ride on the coattails of the larger investors, even though he was a big player as well. So he also used those same types of strategies because of the volume that he could trade within.
Tell him,
Scott's
Matt, how big of an account he had. What percent he
Oh, I
traded.
mean, he told me that there was a time where he was like in probably 2001, 2002, he was like the number one volume trader on the CME floor. So he was a big player. But a lot of the big players looked at everybody else's order flow. You know, they all saw who was getting in at what positions, and it was all built around their own thesis of where they expected the market to go, et cetera. So he had enough experience to understand order flow at probably some of the deepest levels that I think any human could during that time. His strategy is built around using Bookmap. And I know to a lot of the newer traders, Bookmap's a little bit of a foreign language and something that most I don't think really have heard of before. But the long and short of it is it is a data display that you can look at to see where the orders are being filled and also where the resting liquidity is going to be. So his strategy on what he would do is he would look for sizable orders that would come in that he could see in real time. And based off of the spread or how many orders were taken out at certain price points, he would then fade those moves. He would wait for the retracement. So price would extend, come back. He would enter and then go long or short depending on the setup. He would also take ATR levels. So when those orders would come in, price would move 1, 2, or 3 ATR levels or average true range levels away from price, and then he would fade that back down to the major volume event that started that whole run. Um, a good system. I don't want to bash it. I think I think it's valid. I've seen it work, but it's limited in the number of opportunities that you get every single day. So, for instance, for market open, for the first 2 to 3 hours, on the NQ, we may have only had 3 or 4 opportunities. Some days it would go 2 hours and there would be no setup. So what he had to do in order to make sizable money is he has to monitor all of the markets. So ES, NQ, the Russell, the commodities. He would look at crude. He would look at natural gas. He would even look at things like, lean hog and wheat and corn and soybean. And so what I found for myself personally, I kind of tend to be one of those types of traders that I want to master one thing. and do it extremely well and be almost like a solid source of information for that product. I didn't want to have to look at 20 different products and try to find opportunities because they move quick, and you got to be really fast and you got to be really skilled to know what's happening. And so what I found was that although I gravitated to the methodology because it made sense to me, I saw a book map webinar that Kelly had taught, and he was talking about the volume pressure spikes and how that relates to certain bounce points. And I really fell in love with kind of his explanation, his style of kind of walking through and teaching. I think it was maybe like a 45-minute or 1 hour allotment that Kelly had done in Bookmap with the owner. And so I've always been kind of a bold person when I need to be. So I just reached out to Kelly and I said, hey, Scott has been kind of teaching me, I'd obviously pay him for his time, I'd be open to see if you would give me an hour of your time just to pick your brain, because I was just a sponge. I was wanting to learn everything. As we got to talking, I think, we really clicked together what he was teaching, his style, his methodology for entries and exits, and just the sheer opportunities that are in a trading day really spoke to me, because what I'll call my other job business is in real estate. So I've been a real estate broker for roughly 12 years now. Started with a large firm. I have my own practice now. And so a lot of my afternoon is spent doing real estate related things. So I needed something that was going to fit into my 2 to 3 hours in the morning that I could get profit, close it down, and then be done, and then move on to my next task. And so ever since then, I've just really listened to everything that he's taught, learned not just the Isnipe structure, but also the methodology around timing cycles and other things that he teaches as well. But the core of what I learned was first in what you guys are going to learn today, which is in the Isnipe lines. That's bread and butter. It's a tried and true. It's a statistical advantage of ATR lines, bounce points, taking profit, letting winners run, all of which he'll explain today. But it is the core foundation of what you can learn. And once you get that foundation down, you can then start to expand into the other areas like timing cycles and some of the other things that we discuss each morning. So in a nutshell, that's my, I wouldn't call it a testimony, but there it is.
Awesome. Thanks, Matt. Appreciate the time, kind words, and obviously you're becoming a leader in our room, so we really appreciate you taking the moment to speak here. All right, so let's show a couple things here. So first thing we're going to do is we need to go over our rules of engagement on the Isnipe. Now, just briefly, all right, we run a 4-component system in the Impact Trading Room. All right, component number 1 is Isnipe, and that's what we're going to go over today. Component number 2, excuse me. Trying to eat a bite of food while Matt was talking. So we do a 4-component system. The first one is the Isnipe, like we just said. The second one is our own specialized use of Bookmap, which is what Matt had alluded to. They just started beta testing some new components to Bookmap, which is called the Market Pulse set of indicators. And what Matt and I have done is we've taken those set of indicators and we've curtailed them and have used them in our own specific manner that coincides with our training system. So the Bookmap gives us order flow, and then it gives us some technical analysis that we use in conjunction with Isnipe. And so that's why I'm trying to explain a little bit of this detail of the 4-component system. On top of Bookmap, then the third thing that we use is the iStructure chart, all right, which is what you see on the right-hand side here, or on the full screen now. And the iStructure chart is also structural setups, similar to Isnipe, But the difference is that Isnipe is basically a sniping program for dummies. All right? It's like playing Pong on the old Commodore computers. If the ball is coming towards you, you move the paddle to hit the ball, and then it's going to bounce off of your paddle, and it's going to go to the other side of the screen, and it's going to hit that paddle, and you just play back and forth ping pong on the computer. The iStructure system, and it's playing ping pong off of structure setups called the ITS lines. All right, those are basically support and resistance lines. But then we come to the iStructure chart, and the iStructure is also structural setups. But whereas the Isnipe system is designed to give you 10 to 30 to 40 points, right? It's designed to give you a minimum of 18 to 40 points plus on the Isnipe. Okay, about on a really slow day, 12 to 15 setups. That'd be a really slow day. Really slow day. On a normal day, we can have 20 to 35 setups playing ping pong on the Isnipe. So just as Matt alluded to, you can be here for just a couple hours a day, whether it's in the morning, evening time, whatever, and you can make some money just playing ping pong without having to have a lot of technical analysis. The iStructure chart, however, is structurally but also technical analysis inclined, in that we have about 15 different trade setups that are set up off of structure plus technical analysis, and we use the structure from this chart on a 1 minute time frame. That's what this is, a 1 minute chart, versus the Isnipe chart is a 10-4 Renko chart. And we use confluence between the structural lines on Isnipe and the structural lines or the structural setups on iStructure. Added to that, okay, we do our fourth component is called NAVDAR, short for navigation and radar. I'm a former F-16 pilot. I was in the military for a long time. So I basically designed my own system and gave it names that had to do with stuff that I was associated with in the military. Those specific names are written over on the right-hand side, and not necessarily a discussion for tonight, but just want you to understand why there's nomenclature that's probably different from anything that you've heard before. It's because it is my own nomenclature that I have designed to be with this, because I traded this by myself before taking it public to other people like yourselves, and so I just named it what I wanted it to be. Now, the fourth component is also seen semi on this screen, and that's the NAVDAR system, which is a predictive time and price cycle methodology. And I say predictive because it is based off of literally over 200 years of data on the cycles. It actually takes into consideration two different algorithms that are used on Wall Street. It is used by interday, mean multi-day cycle thesis that runs over several days in a row. And then intraday, we have our own 3 to 5, sometimes 6 rotations per day. And predictive-wise, we actually, as you can see on the screen, it rotates different each day. We have 24 different patterns, but we see those patterns repeating over and over and over again. And we see the time frames repeating over and over again. So I may be able to give you a window of opportunity where we might have a high cycle or a low cycle, and I can pinpoint it sometimes within an hour. Sometimes I can pinpoint it within 10 minutes, okay, 20 minutes. It varies day to day, but we are as accurate as giving you an 11-minute window all the way to a 2-hour window, again, depending on the day. And so that's why we watch both screens at the same time, because I don't want to be a one-trick pony. While this is a standalone, Isnipe is a standalone plug-and-play system, right? I want to be able to be a true professional, and I want to be able to trade for more than 18 to 30 points on trades. So the Isnipe system gives us those 18 to 30 to 40 points, where eye structure, for example, can actually give us 100-point moves based off the setups. These ace lines, for example, that you see can produce a first target of 50 points, a second target of 75 points, and then a third target of 100. And then there are times that we can go 200 to 300 points on these moves off the ace setups. All right, those are on the days where we have like literally 300-400 point moves in a day. Obviously, that's not normal, but it is possible. I can show you screenshots of somebody. I don't actually have a screenshot of myself capturing 400 points because I usually take profit a little bit before then. But I talk in this room all the time about a student who studies this system. He's a 19-year-old kid, a freshman now in the University of Maryland. And he has studied this system for the last year and a half. He does no Apex, no prop accounts. His parents gave him $30,000 or $10,000 to start with. He blew it. They gave him another $10,000 to do the system. He blew it. They gave him another $10,000. He blew $5,000 of that. Had $5,000 left out of a total of $30,000. Got very serious about studying all 4 components of the system. Actually, a little bit less on Bookmap, but on the other 3. And he has turned $5,000 in a little over a year and a half to $755,000 all cash. He is a 19-year-old. He started doing this the beginning of his senior year of high school, and then went into college, and now has programmed his schooling to be off in the mornings to trade with us for a couple hours in the morning, and then he goes to class in the afternoons, evening, and that's his daily schedule so far as a freshman at the University of Maryland. So the benefits speak for themselves. We have a room, just so you guys know, as new people, that says trade results. Okay, the trade results room in the Discord channel. If you cannot see this when you scroll down under text channels, let me know because there's something wrong. For anybody that's new, if you can't see something, make sure you've gone in here to the important must read section, and you got to give a thumbs up or some emoji to all the different sections where everybody did, because that unlocks you the ability to see. And I can't tell whether you can see it or not. I may have given you permission, but actually it's auto permission. So I actually don't do it. It's automatic, which is why you have to give the thumbs up to see some of these channels. Some of the ones you may see in here are not visible to you if they have a lock on them, unless you have been granted access to those, because that is for people who pay for additional components of the system. But you should all be able to see trade results. All right, and we've only had this room open for about 2 months, and you can see that we have tons and tons of pictures of people making. And I tell everybody, don't post anything unless it's over 50 points. So everything that you see in this channel should, for a minimum, at a minimum, be worth 50-point trade or more. All right, you'll see 50, 100s. You'll see tons and tons of points of trading. All right, this is live trading where you can see the actual results, so people can come in here and believe what they're seeing because it's posted by more than just me. I do post, all right, results, trade results in here. If you come up to the pin section, you can come here and you can see back testing sections where we have gone and shown the results day to day on back testing. All right, I even do it with certain members of our rooms, like we're going to do today, and I say who the person was that was with me that we back tested, and then we post the results for everybody to see what we did jointly. This particular 2 things right here, this homework this weekend on the 4th or the 12th of April, these are results by the freshman in college who's used this room. So come take a look at this when you're done and you have a chance. In the week of April, he posted 1 week of trades. All right, the week of April 1st to week of April 8th. This is just using the Isnipe and the eye structure system for runners. This is not even his core position. After he took his core position off and he let his winners run, in the first week of April, he made $97,000 off of runners. Now, the number of runners he had can vary from 29 to 11. But he may be trading 60 to 70 micros to start off with. Okay? If you only took 3 runners held from those trades, so you didn't do all the numbers he did, but you only had 3 contracts that you left as runners using our system, then that would have profited you in a week 12 grand. If you only caught 50% of those 3 runners in that week, that's an extra 6 grand per week. Okay? What's 6 times 4? Anybody?
Only 4. Sorry, I was on mute.
That's all right. So that's an extra 24K per month on top of your core position. All right? So, learn the system is what I'm trying to tell you. It is possible. You can become independently wealthy, and this can become your only job if you want it to be. I do not recommend anybody try to make this their only job until they really, really, really understand the market fully, and not just my system, but my system plus a lot of technical analysis capability. I do try to teach you guys technical analysis so that you can look at the eye structure chart and use that for confluence with Isnipe, because I personally believe that, like Matt said, he wanted to learn one thing really well, and that's this system. That's this Isnipe. However, we can combine this one system here and now add 15 other trade setups, also with understanding cycles and which directions we might be biased towards through the day, and that will help us understand how to leave runners on when we've built them or when we've taken them on the Isnipe system. So, without further ado, let's go to the rules of Isnipe. Any questions before I go to the rules of engagement? Any burning questions? All right. So here's the rules. Rule number 1, use the conservative rules that I give you. Okay? It will produce a 78% win rate for you if you stick to these conservative rules. You may be able to get into more trades later on by curtailing this and becoming a little more aggressive. But for right now, what I want you to do is follow the rules here so that you don't take losses initially. What I really like is you to practice on sim until you can make profit for 5 out of 7 days, and then go on to trading 3 micros. And then when you can make profit on 5 days using micros, 3 micros, then maybe you can go up to 6. All right? So that's the way I would like you to practice to get the system down so you're not losing money, because obviously it doesn't benefit you to lose real cash or to blow a PA account because you don't fully understand the system. So it's better to take an extra 2 weeks, maybe 10 trading days, 5 one day, 5 another. Ty, I get him to talk about this all the time. He followed that system in 11 days. He graduated to using real money, and now he's gone to having multiple prop firms accounts, including 250K accounts. Matt used this system, for those who don't know it, passed 10 250K accounts this last week in one day. He made like $17,500 using this system. Multiply that by all the accounts. I think it was 10. I don't want to spill too much information, so sorry, Matt, if I'm spilling any beans here. But that's what he was able to do using this system. So the system works. So rule number 1, know the times. Primary time frame, the best time to trade in the day is on RTH, is from 6:30 to 8:30 Pacific Standard Time, 9:30 to 11:30 Eastern Time. I do like to trade the hour to sometimes hour and a half before RTH session opens, because it tends to be much smoother, even more smoother than the open at midnight my time, or 3 o'clock in the morning for those of you East Coast, or I guess 9 o'clock, no, 12 my time, yeah, 3 o'clock in the morning your time. Wait a second. I'm getting mixed up. Yeah, 12 my time, midnight. So that would be 3 o'clock in the morning your time. So, know when to use the trading, because it works the best 1 hour prior and then the first 2 hours. After 9 o'clock, okay, 9:30 Pacific Standard Time, we go into something called the slog. The slog is when Wall Street goes to lunch, it has their meetings, and the manual traders aren't there as much, and there's more whipsaw action from the algorithms because the volume dies down when the primary traders are away. So primary time frame, as you see there, secondary time frame after the slog, 11 to 1 o'clock. Now there's a saying that the amateurs open the market and the pros close the market, which means in the first 30 minutes, 20 billion people, not 20 billion, 20 million people, I don't know how many out of 5 billion people on the earth actually trade, but millions and millions of people trade, and they come from home from their 9-to-5 job, and when they get home, they put in their orders. They look at their stock portfolio, and they say, hey, what do I want to put in when the market opens tomorrow? They put in the orders, and so all those millions of people with buys and sells at 6:30 in the morning, 9:30 Eastern, triggers a massive volatility spike in the market, up, down, up, down, up, and down. So we have a no trade rule for the first 8 minutes. Do not trade for the first 8 minutes, no matter how experienced you are. Let that jostling between the buys and sells move out of the way. After that, between another 10 and 20 minutes, there's something called the spill, S-P-I-L-L. The spill has to do partially with the last hour from market close on the cash close at 1600 hours Eastern to the electronic close on 1700 hours, because the market still trades for another hour after. In the old days when the CME pits were open, it was a 15-minute window between cash and electronic close. So after the retail traders stopped trading the cash market, the pit traders would still get to trade and shore up positions for the next 15 minutes till a quarter passed. Then when they got rid of the CME floor and the pits and went all electronic, they extended those hours to 1700 Eastern. So the spill and has changed a little bit over time because of that difference in our CME markets. Now, because of that spill and because of that jostling of the open, the conservative rules tell you do not trade for the first 30 minutes because it will blow through some of our lines that we're going to go over tonight. And I don't want you to get blown out in the first 30 minutes. Then you're red, and then you have to recover for the next 6 hours because you lost $2,000 in the first 30 minutes. So I ask you to be patient. Part of this process of learning is also the psychological side, and I really try to emphasize that we do not let fear or greed make our decisions. We don't have fear of missing out a trade because we know that we can have 20 to 35 setups in a day between the two systems, just on Isnipe alone, plus what we see on structure. Greed, we want to have a 1% growth per day. If you can achieve 1% growth per day, and you do that over the next year, you're in the top 3% of all people trading in the world. Very few people can make 1% a day. So we don't want you going for home runs. We want you going for base hits, but letting winners run to turn them into home runs, but it's based off of statistics and the rest of the rules that I'm going to show you today. Because if you do follow the rules, yes, you will get 18 to 30 points off the Isnipe system, but then when I explain to you or I tell you to hold on to runners based off of my knowledge and understanding of the iStructure and the Navdar system, you will then hold runners for 50 points. Felix, you're in here. How long did it take you to get a 50-point trade after you were in the room?
I think it was day one.
Okay. Brent, how about you?
Yeah, it was day one.
Okay. So it's not that hard if you just take the time to listen to what I'm processing and don't jump the gun. Just follow my lead. Let me teach it to you over a period of time. Shoot for 1%, and then we'll grow from there. Then trust me, you will grow naturally from 1 to 2 to 3 to 5. All right, you know that kid? Yeah.
If I could add one more piece to that 50-point runner.
Yep.
Part of the reason I was able to do that is because up until going through your system, I was always looking for ticks. I was looking for 9 ticks take profit, and my stop loss was like 21 ticks. So I had to get past that initial it's okay to let it come down 12 points. It's going to come back around. You just got to wait it out. That's what took me the longest. And as soon as I could get over that, that's when I got my first 50-point runner.
Nice. Thank you for adding that. Let me ask just another question, though. Out of all the trades you've seen, I think you've been here, 2 weeks now, roughly, right?
Yeah, about 2 weeks.
Okay. How many times have you actually seen it excurge? Let's say you took, I don't know how many trades you've taken, but let's just say on average, out of every 10 trades, how many actually excurted down to 12 points?
Maybe a handful in the last 2 weeks.
Okay.
If that.
So most of them, right, are like a 5-point stop realistically?
Yeah, the hardest part is the entry, because the entry isn't right at the fractal, because you have to wait for the fractal to form.
Yep.
But that's where you got to be quick enough to pull it down past, 12 points below the fractal or above the fractal. And that's where the hard part comes in, is getting fast enough to do that, because you should be in, but then it's getting your stop set the right way, and then making sure your 3 profits are taken at the right point too.
Yep. And I think honestly, it was my bad when you guys first came on your little group, because I don't think I explained it like I'm going to explain it tonight the first time. So because of the experience and the feedback I've gotten, we're going to go over the risk management piece a little bit more detail. So I know I'm talking already for a lot. Let me speed this up, and we'll get going with the rest of the rules and then go into examples. So thanks again, Brent. So we got the time frame. All right. Now, what is the actual rule that we're going to use? We're going to use 3 micros, 3 lots. Okay, we're going to base this off of 3 lots. We take something called the first touch rule, first pullback rule. All right, we want conviction and confluence that the trade's going to be good. We never catch a falling knife or a shooting star, something going skyrocket, sky high, going vertical, like we saw yesterday, because we don't want to get eaten alive. We want to allow structure to develop to let us know either support or resistance has been developing. Later on, we'll go into a little more aggressive phase 2 of these conservative rules, where you will get up to where you'll take a first and second touch of like the 15, 20, and the 45. Okay? But for right now, the rule is, make sure you pay attention to this, first touch after 7 o'clock of the 15, 20, 31, and 60 lines. The 10 is a special case here. The 10 you are not allowed to take until 7:25, 10:25 Eastern. And that is because we still have some counter trend trades that occur in the first 45 minutes that can swing through the 10 line. So we make one caveat to this. You wait for the 10 until after 7:25 Pacific Standard Time. You do not take, we have 4 and 6 lines, but you do not take those trades. Not while you're learning. Unless the caveat is, based on what I see, I say, go ahead and take this 6. If I tell you to go ahead and take it or to add it, then you can do it. You can break that rule. But I would not break the rule while you're learning unless I specifically say that. Targets. If you don't know how to set up an ATM, then we need to have another conversation around setting up ATMs to trade off the charts. Because what I would like you to do is set an ATM with a target of your first micro lot to come off at 8 points. The second at 10, the third at 12. Now these are the rules. I'll talk about moving to 12 in a few minutes. But the first rule of the conservative is you take profit at 8, 10, and 12 points. So 1 micro, 1 micro, 1 micro. Okay, that'll give you 8 points, plus 10 points, a total 18, and then you get another 12 or more for runners after that. You use the fixed size of 3 micros, like I said, and your stop is going to be 12. We're not doing 15 right now, we're doing 12. 12 points, okay? That gives you a 78% statistical odds that the trade is going to be valid for at least 10 points. Now, we're not dollar cost averaging. You're buying all 3 lots at the same time. So not 1, 1, and 1, but 3 micros. All right, now let's get into looking at how that works on the chart. So let's go to my time frame this morning at 6:30. Again, this is a 10-4 Renko chart on Pacific Standard Time. I'm going to shrink it just for a little bit here to just kind of see the big picture initially. So the big picture is the market opens, all right? At 6:30. So we'll take a little ellipse tool here. Market opens at 6:30. That's in this area right here. We have a no trade zone while it's chopping around, okay, for the first 8 minutes. It's not doing much, very small range. And then we get where it kind of finally says, yeah, I'm going to do a little move, and then I'm going to move down. And Matt, what is this move called?
This is called a Wyckoff spring.
Okay, and where did it go?
All the way down.
No, what's the location we call it? I'm just backing up what I've said already.
Oh, you mean on the drop down?
Yeah.
Oh, yeah, that's the spill.
Well, yeah. Actually, it was a very shallow spill up today, so it was the AM low today. I know you weren't here all day.
Yeah.
But so what we did was we kind of just did this gentle climb up, all right, to have this spill up pattern. So we spilled up, and then we went to an AM low. On the chart over here, we stated in the morning before the market started that we were going to have an AM low. Okay? So we had a lean and a bias to go that direction. Now, we usually, in the first 45 minutes, okay, get a little jostling of back and forth. So now what happens is we continue, and this is why I tell you on the 10s, not to take the 10 initially, we actually pop up, all right? So actually, I'm thinking of yesterday. So my bad. Today's AM turn came a little bit early. So this was the first AM turn. But I don't want you taking any trades on the 10 until you get to 725. So after 725, you're allowed to take first touches of the 10s. Now the way the nomenclature goes, so you can see this chart, is any line that's above you is like a resistance line, okay? And it's numbered here on the side. So the way the order goes is you have a bear 4. We don't take that trade. Let me just move just a little bit, see if we can see more lines on here. Okay, here we go. Here we have a bull. I just wanted to show you some lines where they're stacking on top of each other. So here we have a stacking of bull lines. It says bull, bull, bull. 4, 6, 10, 15, and 20. The colors are always the same for that line. The number 4 is always white when it's a bull. It's always yellow when it's a bear. If the bear lines are above you and they're applicable to the time frame we're in, it'll actually say bear. But this yellow 4 over here is not listed. You don't see a yellow 4 over here because that line ended right here. And if the line ends, okay, it's not listed anymore. It's not named anymore because we don't want it to be in the middle of your charts taking up space for the price line. So the only lines that are active are only the ones on the right side of the screen. So the bull 4, 6, 10, 15, 20 are what's active on the screen now. Above us, we have a bear 31 and a bear 35. That's because the 4, 6, 10, 15, and 20 have already ended on the bearish side, and all that remains is up here. Now, I said, again, we play ping pong off of the lines. So now let's go to very specific examples after 7 o'clock. So everybody, let's get pen and paper out. Let's take notes because I want you to write this down and seal it in your mind. Okay, 7 o'clock is coming. So based off of what I said so far, Renee or Connie, I'm putting you on the spot. Can you see around 7 o'clock the first line that we might take if we're looking at a 15, 20 31, 35, 45, or 60 line. So the way you do that is you look at where price is at 7 o'clock, and then you look at what lines are around it. So where are we going to come make a touch after 7 o'clock that you can take a trade? Right here. Okay. So
You're talking about the green line on the bottom?
Yep, it's this 45 line. Okay.
Oh, I see.
So the first time that price hits a line greater than 10, around 7 o'clock, is this 45 line. So this is a good point because you're not necessarily taking it in order. You're not looking for the first 6 or the first 15 or the first 31. You're looking that once the clock says, Cinderella, once it strikes midnight, what are you allowed to do? You're allowed to take a trade on the first line that's not a 10. Now, when I say the first line, that means price comes down and you're going to play ping pong. This is vertical ping pong instead of horizontal ping pong, right? Horizontal pong, you're moving the paddle on each side of the left and right screen. Now, we're flipping it vertically and you're playing ping pong between this line and maybe this line, between this line and this line, between a bull line and a bear line, a bull line and a bear line, a bull line and a bear line, a bull line and a bear line. But what you do is once a line is tagged, you go to the next line in order. So let's take you through this. The order entry, okay? These dots on the bottom are called fractals. The candles are colored to imply strength or weakness. If they're green, they're strong and generally moving up in price. If they're red, they're generally coming down in price. If they're going from red to blue to red, you've transitioned very quickly to just kind of a little momentary uptrend, but then it goes right back into its negative trend. Here we're transitioning out of red to dark red to cyan, and then we go to green. And then it's green, and then it transitions from yellow to red. So this just kind of helps as an eye magnet to help you identify strength or weakness. And so we're looking for confluence. Red background, downtrend. Red candles, downtrend. We have something called an oscillator down here. Red oscillator, downtrend. Blue and green, uptrend. Blue background, uptrend. Green candles, uptrend. So if I'm coming down, any line that I would take, because we're in a move down, so we knew that we're coming down to the AM low, for example. We knew that we had weakness planned out. So what we're looking mainly to do is looking for the bear lines that we can bounce off of to come down. But now you're not allowed to trade this as a beginner because you're learning this system, so you have to wait till 7 o'clock. This is the first line that you're allowed to touch that the candles come down to tag it. We have a proximity rule. The proximity rule says that if that dot develops within 3 points of the line, you're allowed to take the trade. Either 3 points above it or 3 points below it. Okay? You're allowed to take the trade. So if it comes down and it skirts down to 3 below and it forms a fractal on the way up, you're allowed to take that trade. Now, a fractal are these dots on the candles. The fractals confirm, we like confluence, confirm a reversal in direction. Now, I'm going to get to what Brent said in a minute here, but what happens, it takes the second candle to close before you get the dot to form. So as the price comes down and reverses, you will get the candle after the second candle has reversed direction from down to up. So from that spot right there, okay, from the fractal itself, you are looking to take profit from the first 8 points from the fractal. So that would take you to your first exit when price came up to right about this green line. You would take off lot number 1, either automatically or manually. You then wait for the second one to come and hit 10 points. Okay? That would be right about here. Your third one, you would wait till it comes and hits 12 points somewhere. Actually, it probably hits 12 right here. Yeah, you actually get 8, 10, and 12 in this little second move up. So you would be done with a trade, and you would have 0 point risk, because what you do is at the 8 point mark when you take off your first lot. Okay. Now I'm going to caveat this. Pay very, 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 very close attention to this. It is 8 points from the dot, not 8 points from where you get in. I have to create a system that has rules that gives you statistics based off of some black and white rules. The problem is you pulling the buy button versus me pushing the buy button versus Matt pushing the buy button. We're all going to hit buy at a slightly different location and time frame. So whereas I might be able to see, because my eyes are experienced in seeing the forest through the trees here, the spaghetti on the wall, I might see the reversal and take the trade right here. It might take you guys to up here to trade. And what Brent was saying was that he might get in here where this green line is, and then what would happen is it wouldn't come all the way up to 8 points, and it would come back and reverse on him and maybe come down and try to stop him out, because after he went, like 8 points, he put a stop to break even. And this is why I want to explain it better than I did when I did it with him and with Felix, is that it's 8 points from the fractal. So, or 8 points, if you need to do this, I know it'll be a little bit off, but if you're having a hard time doing math quickly while it's looking, every line has its identifier in inverted colors over here. So this 45 line is at the price of $19.29. So assuming that you're right on the line, if you added 10 points to that, you're talking 39. Okay? Well, that might be the place where somebody else gets in. But when you do a buy order, don't forget, if you're using a chart trader system, you should get a buy line on there that gives you the price at which you entered the trade. You can quickly add 10 to that, and then maybe minus 2 really quick instead of trying to go, what's 8 on top of 39? Okay, 39, 49, minus 2, 47. Okay, just trying to help you do mental math faster. But again, the rules are 8 points from here, leg out 1. 10 points from there, leg out another. After 8 points, our stops are programmed, because you created an ATM, to be 12 points below where you got in. Now, when I say a 12-point stop, I mean 12 points from the line. That's our rules. 12-point stop from the line. What you will find is that 3 out of 15 trades, maybe, will come and excurt more than 5 points with a little retest. Because what you see here is you see it pops up and then does a little retest. The markets all work like that, right? They pop, they back and fill. They pop, they back and fill. They spike, they retrace. They spike, they retrace. So you're going to always have some ebb and flow to the system, so you can't let it scare you out. The statistics tell you that, yes, you may pop up 9 points, and then you might pull back 9 points, 8 points, and then you're going to now go up another 14 points. But it did not come and break below the line. And so the statistics are there to allow you to have confidence to use the system so that you're not stopping yourself out all the time. Now, what Brent was doing is he would take the trade right here, right? And he would do 12-point stops from wherever he got in. And if it was kind of like up here, then 12 points now brought him to right here. And what would happen is it would go up, but this second little pullback here, instead of stopping equidistant with this fractal, would actually pop down to right below the line. And then it was stopping him out.
And that's exactly what was happening.
And then it would go up another 30 points without him.
That's right.
So that's why I want to be very clear here that you trust my system. And that's why I want you to do it on sim first and then 3 micros, so that you get the confidence in the system. that you can read the forest through the trees, the spaghetti on the wall. So remember, it's from the fractal or the line, if the fractal's on the line, 12 points. That's where I want you to take the stop. Now, let's just say you did what Brent did. Okay.
And taking those micros versus minis is a big deal, because when you're looking at a 12-point stop loss, but you've already gotten in, say, 3-4 points above, now instead of being 12, you're looking at a 15 or 16-point stop loss, really, from where you got in, and you got to be really comfortable with that risk. And if you mentally get past that point, you're golden. That's what was hard for me, because I like trading minis, so it was difficult for me to go backwards, and that's when I went to the micros and I got more comfortable with it. Now I'm much more comfortable with this trading strategy.
Yeah, you really do, because I'm going to teach you something else later on where we do leg in and leg out when we see certain structural setups, and it's better to do micros for those instead of the minis, because we can make thousands of points playing micros. All right, trust me, thousands of points using this system, trading just micros. All right, here is. Let me just show you something here. I want you guys to believe this. Okay, here's a great picture. Okay, this was back on the 25th of April. All right, trading the MNQ on the Isnipe system. Here is 4 micros. I legged in and legged out, so I wasn't, we were in a choppy zone, and I was waiting for something called the Wyckoff spring out. All right, that'll be another discussion we have later on. I'll teach. Again, I want to stick to the main rules, but what I want to show you is proof. I legged in a couple times. I had to leg in, leg out, 8 to 10 points, 8 to 10 points, 8 to points. And I probably took this trade like 3 or 4 times down here at the bottom on this line. But I already knew for whatever reason that we were looking to bounce, okay? And so it took me 3 or 4 times to get in, but I did. And I legged in, and then I was able to like maybe get in, get all the way out, get in, get all the way out, 8 to 10, 8 to 10. And then I took it one more time, and I was able to leg in and leg out. And then I got, after I legged out of some, I had a core of 4 left, and I let those 4 runners, okay, run 229 points off of 4 micros. Okay, off of 4 micros, that's $458 on one trade. My total volume for the day, what time was this? This is at lunchtime. By lunchtime, I had 2,798 points, not ticks. Points. You go to that room, you will see tons and tons of pictures of literally thousands of points a day. That's why I'm telling you, trust the system. Start off base hits, 1% goal per day. And that's going to lead me to my next thing. Never move your stop. Never move your stop.
That's a quick question there.
Yes.
Tony?
Yes.
So you said set up a 3-target ATM, 8, 10, and 12. But if you're hitting all 3 targets and that's taking you out, are you buying in again? Like hitting the buy and then it's doing the same 3, 8, 10, and 12? How do you put a runner in there if you're hitting all 3 targets?
Okay, great question. That gets into phase 2 of the conservative approach. There's part A, conservative, and part B, conservative. Part B, everything is the same except for we move the last exit, the last target, from 12 points to like 20, 25 points. Now I'm going to show you something that's advanced, which is where you will get to. I no longer trade 8 to 10 to 12 points. Okay, and then let me show you why. Once you pass conservative phase A, you'll go to conservative phase B. Conservative phase B is that last one. First two are the same, 8, 10. That last one's going to be 20 or 30 points. Because that leads into aggressive A. Aggressive phase A, for people who are more seasoned on the sniper system, because of where we get in, because we wait for the fractals to develop, yes, sometimes our entry spots are going to be, where that second candle ends. All right? So we're giving up a couple points of profit for confirmation of the trade. Because what we don't want it to do is catch a falling knife and come shooting through this line like you see right here. Or right here. Okay? When it's coming up, it shoots through this line. There's no fractal that has been identified when it tags the line right there. I'll show you more examples as we go. But how do we know it's going to stop here and not keep going down? Well, we use structure. We either wait for the 4 and 6 of the other side if we're in a bearish situation coming down. We could wait all the way to see structure develop on the other side as support, the 4 line and the 6 line. Then we could let that impulse move come up, pull back. Remember I said I like pullbacks. First touch, first pullback rule. So in this case, we see the 4 and 6 develop. We let it spike up without us, maybe. This is how Bookmap teaches. I don't teach this. This is how other conservative traders teach. They want to see an impulse move up, right? They don't want to catch a falling knife either. So they want to see an impulse move up. They want to see price come back down. And then they want to see price consolidate or break out one more time. Bookmap, who I've done training sessions for, I do it every Thursday with them. They teach, Bruce at Bookmap teaches that you do not take a trade until you get an impulse move up. It does a pull back. Now they're not always using a 10-4 Renko chart, so it looks a little bit different. So they may wait for it to pull back on a 1-minute bar. And then once it passes this level here, all right, where the impulse move came, once it passes the impulse move level, that's now where they will train people. It's actually on their website. They have a learning session that teaches this. They will now buy once the level, the breakout above the impulse move. I don't teach that because why? Because I have a system that's based off of statistics that gives you a 78 to 92% win rate on a regular basis. You look through those trade sections that I told you about, you'll see days where we have 90%, 88%, 92%. It's not always 78. It can be sometimes 65%, but a lot of times it can be 85, 90%. So why do I want to give up, okay, where I know a structural point is that's based off of price and volume to the left side of the screen? We have these lines are based off of mathematical algorithms. They're not just random lines. Okay? So we can get in here with a bounce playing ping pong for dummies, and now we're catching, right, trades that they're not getting into until 40 points after us. That's why we get thousands of points a day and they get 20 points a day. They have less trade setups, like what Matt was talking about. Instead of 20 setups a day, 30 setups a day, they have 4 or 5 setups a day. They'll wait 2 hours for the perfect setup. I'm giving you a system that will allow you to get in and out dozens and dozens of times before they've ever taken a trade. So let's go back to our rules. So what we want to do is when I was trying to show you now the aggressive rule to answer Stefan's question. Stefan, I'm getting to you. What I do for me, okay, because I can see it a little faster. I can see the reversal a little better. I trust the lines. And on top of that, I have structure from iStructure and the Navdar system that helps me know. I can pinpoint this turn sometimes within 11 minutes, 15 minutes. So now I'm looking for this kind of structure in my time frame to have a reversal. But even if I didn't have that, the way I trade this is, and you'll get here, is when I enter a trade, target number 1 for me. So let's just say I even get into here. Okay, I'm going to move this drawing just a little bit right at that candle. Okay. So now, let's say I got in here. I didn't even get on the fractal myself. I do not exit until price hits the opposite 4 line. It's this yellow. If I'm taking a short, okay, let me show you an example here. Till it hits the opposite 4. That point right there just gave me 8 points from my delayed entry. My stop is still 12 points. This pullback came nowhere near to that. It might come back down to here, maybe. We'll look at some of the trades and look at it. Target number 1 at the opposite 4 line. When do I bring my stops from minus 12 to break even? I used to say break even. I had to change that this week because it was causing confusion. I don't want you to bring your stops to break even because that's actually at the point where you're in, and then this pullback will take you out. When I say move stops to break even, I really mean, and I'm trying to say this now, is move stops to the line or to just below the fractal. So I'll say move your stops to the fractal, move your stops to the line. It means you're taking this line, okay, right here where 12 points is, and you're bringing it up now to the line itself or just under that fractal, which was the basis of our trade. Now, if it pulls back, it's not stopping me out unless it goes all the way up here and then comes all the way back down here. And if that happens, okay, I got 8 to 10 points. Well, for me, I got 8 points on that, but where's my second exit? Okay, so now that first one was 8. That was there at the opposite 4 line. My next trade, Stefan, exit is at the opposite 6 line. So now I made 8 points off the first one, and now I'm making 14 points off the second one. So I've gone from 8 and 10 to 8 and 14. Now my third one, I put my stop high enough up here, okay, and the way I do it is I just have an average from line to line, and I know that that's going to end up being about 25 points. So I put my stops up at 25 points because my third exit is at the opposite 10 line. 4 line, 6 line, 10 line. Now I'm going to come back to this trade in a second, but I'm going to just show you the same thing over here. If I was to take the first touch of this purple short, okay, I am going to have a stop. That's going to be 12 points. Now, most of the time, 12 points gives you almost the next line above or below where you're trading in general. But I take this trade, okay, and I go exit at the opposite 4. I know these lines good enough that I might now, in my experience, I will take 3 micros as soon as price hits and I just barely see the candle start to reverse. I'll leg in there. As soon as I see the fractal develop, I'll add another 3, and now I have 6 micros with a confirmed rotation change. I don't want you to do that until you get to the aggressive stage. It's two more levels later. But sticking to this rule, for you guys would go 8 points, 10 points, 12 points. You would be out at the first opposite 4 line. We're taking a bearish trade, so the opposite line, first line is the bull 4, white. For me, this now becomes your last target. For me, it's my first target because I leg out at the first opposite 4, and then I leg out, okay, at the opposite 6. That's 20 points for me. Then I put it to the opposite 10. That's another 31 points for me. And you can see that the price never came even within 5 points of my entry. Where do you bring your stops from break even from minus 12? When you hit 8 points, you bring the line, your stop, to the fractal or to the line. In this case, you would actually put it, because the algos know where that fractal is. This is not an unknown to them. So I actually want you to put the stop. Doggone, I moved the wrong thing. I want you to put the stop just above the fractal, right there. So that if it does come back and does this little pullback right here, it doesn't stop you out. Because we constantly get a little second impulse move, retrace. Ba-boom, ba-boom. But you can see our first two trades of the day, they both went to the opposite 10 line. So now my winning trades, okay, are getting me 18 points, plus the last one, I'm getting 30. So now I'm getting 48 points a trade. Now, once you go to the next phase, so we'll go back to this text here. What can we do to make even more winners? Let's say that we know that we're going to go from a AM low to an AM high. And I know my Navdar system's telling me we're going to go over there. Then I'm going to have a bias to holding longer, or maybe getting in and out, getting out, and getting in and out. Now, let's say, for argument's sake, to also answer Stefan and anybody else that has the question, is let's say I did this and I did get out at the opposite 10 line. Okay, I just got 38, 40 points, whatever that was. Now, look what I have here. I have a vertical 4 and a vertical 6 line, bullish line, developing. And there is a difference between whether the line is horizontal when it starts or when it's more vertical. Especially for the 4s and the 6s, we look at this. The 4s and the 6s, if there is a very thin space between their development and they're going vertical like my F16, we know that that is an impulse move. And you can see price action telling you it's an impulse move. It's an impulse move because we're coming off a larger line, the 45 line. It's an impulse move because it's vertical. We see the colors change from red to blue to green in one move. We see it shoot through the 6, the 10. So now I'm thinking to myself, we must have a change in momentum here. Oh, I'm switching from a red background to a blue background. What makes the difference between the red background and the blue background? It's based off the 6 ATR. So this orange one, when it develops, it turns red. When this blue one develops, it turns blue. When the blue one ends and the orange one develops, it turns red. When the orange one ends and the blue one develops, it turns blue background. When the blue one ends and the yellow or the orange one starts, it ends. Oh, that was a quick one. Blue one started again because we're in an uptrend going to my AMI. Blue background, strength. So now, here's how I trade this. I take my first 8 and 10. I might have done this. 8 points, get out of 1 or 2, pull back, bounce, add again. Now I've got 2 left, plus I add 3 more. Now I have 5 lots on here. Maybe I waited to this and had a right-sided pivot rule and saw that it bounced off the 4, came back down, and then bounced up again. And I've already seen now 2 higher lows in the fractals. So now I have confidence that I have my turn. I have confidence off this big massive 45 line, which is thicker. And I have an impulse move starting, and I'm going from my AM high to my AM low to my AM high. So now I'm like, okay, I got 5 contracts left. Or even if I had 3, we'll go simpler. 8, 10, I have a third one. I actually, as price comes up here, if I start seeing this color code change, I will take my target, my third exit target, okay, which was sitting here at the 10, and I will now move it up above the next line. And I'll let it sit there. Now, as price continues to move up, I have 1 micro left. Where do I put my stop? I have 2 methods to raise my stops without getting stopped out. I can either move by fractal to fractal location. And I'm not talking about this kind of fractal. I'm talking about a pullback fractal up to a pullback fractal up to a pullback fractal up to a pullback fractal. And I might move my line, okay, to go from minus 12 down here to break even or at the line. And then after I hit the 6 and I see where it's going to come back to and bounce, and I see this vertical move up, and I see these 4 and these 6 lines develop, I then will start following the 6 line up or the next fractal. So 2 different techniques, kind of up to you. I'd like to teach you both so because there's different times I apply different ones. But let's just say I followed the 6 line up. I could either exit out of here at the opposite 10, or I let it go up higher, and now I put my stop once it goes to the 10. I'm like, well, I don't want to give anything more back than the 10 because my normal target would have been the 10. So now I put my target there, and it comes up, and it comes back, and it pulls against me. I get stopped out, but I got no worse. Still never came anything close to breaking my break even, but I legged out at the opposite 10 even though it went above. Or I sit there and go, man, wait till you see something else. Wait till you see it come and look and see what happens after it bounces the 4. Sometimes we'll pull back, hit the 4 and go up. And if I have my line just below the 6, it might continue up and I might get a runner. This is not the best case because in this case, it actually does pull back to just below the 6. So if I was trailing the 6, then the worst case is I would have to get out right here because it dipped down right below the 6, where if I'm trailing the 6 on my last one, I get out. But if I'm looking for a breakout like a Wyckoff spring, or I get a W formation down here and I'm breaking out the middle of the W, I'm pretty good at recognizing a breakout or an impulse move. So let's say now I had the 2, I got out, a pullback, right-sided pivot roll, which just means the pullback to the right side of the first one is a higher low. It's called the right-sided pivot roll. I get a pullback and a bounce, right-sided pivot rolls higher, I add again. So I have 1 left, I add 3 more, I got 4. Now, I'll actually probably leg out 1. Okay, so now I have 3 left. Now, I know I'm going from my AM turn to my AM high, so I might follow now what this does, and I might actually add again on the first touch of the 6 line and put a stop 12 points below that. If I do that, I'm still protected better than my first original entry. So I can actually, after I get above this, I could go even a more aggressive route and wait for the 10 line and see how far I can go up. In this case, if I follow the 10 line, I'm now going to lay out another one as soon as it hits the opposite purple. So now, maybe I lay out 2 there, and now I only have 1 or 2 left. Now, let's just say I have 1 left, because I had 3. I got out of 2. I had 1 left. I bought 3 more. I got 4. I legged out, I got 3, let it come up, bounce, add again, 2 more, or let's just say I just have 3, fine. I'll wait for it to come up to the next line because the next line for me is the purple line. Why would the next line be the purple line? Why would I have the confidence to wait to go over here? 1, because this was a 45 line, really big. 2, I'm going from my AM low to my AM high. And 3, go back to our conservative rules. If this was the first touch where I could ever enter into a trade, now the way I count the lines is, can I trade the 4 when it bounces up to the 4 to short it again? No, because it's a 4 line. Do we short 4 lines? No. Do I trade the 6 and let it bounce down? No, I don't trade the 4 line or the 6 line. Do I trade the 10 lines? Yes. When? After 725. So now I'm not allowed to take that 10 trade. So what is the next line in order that I am allowed to take? That would then be this short. So I've taken a long. I've done these multiple variations of legging out, showing you the conservative versus aggressive rules. But now, if I have runners that are still left from the example that I was just giving you, I have to make a decision now at my second opportunity to trade ping pong off of Isnipe. I only had this opportunity number 1 so far. This is my second opportunity, aside from legging out. This is my second opportunity where I have to make a decision. Do I now want to trade short? Or if I have runners, do I want to let it run all the way up to here? That is an actual another discussion, but the brief answer is it depends. I do have structural setups. Anybody that has been with me for more than a week has already heard me call a 50 to 100 point trade, for example, my vertical DOS or my ace trades. You have literally seen me take 70 to 100 points off these trades because I know it's going to continue to go up based off of my structural setup and my timing. If I've loaded up here because I know that's what I'm doing, I might have 40 micros here. If I have 40 micros by the time I get here, I'm not going to leg out of all of them. I will leg out of some. I will keep a core position. I will add at the next line in order. Because now where's that next line in order? Well, I legged out of here, but I'm holding some runners. I'm now going to buy, again, the first touch here. The first touch there would allow me to have a 12-point stop. And then I leg out at the opposite 4, the opposite 6, the opposite 10, and then I keep a runner. Man, how many points am I getting in here by using that system? I've already got 100 points doing this. So you're not that experienced? That's fine. To finish answering Stefan, then we go to the next phase, and then I'm going to have to call people who want to stay can stay. What I do when I know those trades are going to go 50, 70 to 100 points, or I have high confidence in them, no matter how many I buy, 3, 6, 10, 40, I will never get out of all of them if I think I'm in a 100-point trade. All I'll do is I might get out of everything but one, and then I'll let it come back to the next line, and I'll buy another 10 or 20, and then I'll let it leg out like that. But for you, we're going to play ping pong, conservative, phase 1 rules. So back to the basics. You get to take it off at 8, 10 points, 12 points. Once you hit 8 points, you bring your stops to the line or just below the fractal. How do we count the lines? I already told you that. We don't trade 4s. We don't trade 6s. We don't trade 10s till after 7:30, 7:25. So the next line I can take is here. 8, 10, 12 points. When do I bring my stop from minus 12 to break even or the line? As soon as I leg out 8 points from the line. 8 points from that line. It'll give you the math over here. Add 10 points to the color, and you know where 10 points is. Now, where's my third trade opportunity? Well, I've taken the 45. I can't take the 10. I've taken this 15 line. What's the next line I can take? Well, it's either the next line above me or the next 10 below. Well, actually, I can't even take that 10 because I'm not at 725 yet. So now you're in phase 1, even though it's a valid trade, it's not valid for our conservative rules. So now I can't take that trade. Now I'm coming back up to another line that's greater than 10. I can't take that one because I already first touched this rule. So now I'm looking at price. Where's price coming down to? Hits the 10 again. Can't take that trade. Where's it coming up to? First touch of this. So now I can take the first touch of the 20 restricted by strict rules. Where do I leg out? I leg out at 8, 10, 12 points. Where does my stop come from minus 12 to the line? When I hit 8 points from the line. Now, even if you got in here because you're slower, well, so be it. Look where 8 points is. 8 to 10, take one off, and you bring that stop. And I'm going to reinforce this again. No matter what you think's going to happen, do not change your stop. So if you are minus 12 and you're somewhere around that 8 to 10 point with fast math, you bring that stop to right on that line. And if you get a runner that can take us to the opposite 10, then thank you, Lord, we got a few extra points. If it pulls back on us like this and it comes back and hits that, fine. We got one off, maybe out of the 3. The other 2 get stopped out. Fine. I only get maybe 8 points. That's fine on that trade. Remember, you're going to have 20 to 30 of these trades a day. If you only get an 8-bagger or only a 5-bagger a couple times, that's okay. If you take 20 trades and you only get 5 points, okay, you're getting 100 points on the day with no risk, hardly. Stick to the rules. Stick to the stops. Now, where's my next line? That's trade 1, 2, 3. Now I have to come down to an opposite line. We know we can't take the 10 till 7:25 or later or after, right? So now I'm looking for the next line. Well, do I want to take this trade because now I'm hitting a 10 after 7:25? The answer is no, because if we look to the left, we've already bounced off the 10 a couple times, and we don't want to go to the well too many times. So now I'm still looking for the next line that I
Did you say you have to take one off of the bull after you take one off the bear?
No, you don't have to.
Oh, okay. Okay, I thought you said that since we took one off of the peach color,
Here?
and now we're looking for one to bounce off of one of the bull lines. That's what I thought I just heard you say.
Well,
You
I
don't
did. No, you don't have to. Well, I'm just trying to explain the rules. So no, you don't have to. I'm just talking about if we were just no other considerations, no navdar, no cycle turns, no other structure. If we're just looking at the rules of our first touch rules, what I now want you to understand, I think you guys understand the stops. I think you understand the legging in 8, 10, 12 points, right? You guys understand that? Is that clear as mud? Now let's just go to the lines to wrap this up a little quicker for you guys. Okay, so here's the next line I could potentially take a short on. Not that I have to, but potentially. And we said maybe you only got one leg out because it came in back and tucked that line. And, at 8 points, that's fine. We're not going to... But look, if we didn't do that, it would have come up to here and we would have lost even more. That's why we bring the stops to 8 points, because out of 20 to 30 trades, I'd rather not take all these losses from here to here. I'd rather just take 8 points winner, 8 points winner, 10-point winner, 12-point winner, and not have as many losses. So we end up with very positive results. Not only do we have a high win rate, but there's another factor. In any trading system, okay, you want to have two things. You want to have win rate and positive P&L. Okay? Win, R-A-E. I don't know what that is. Rate. Okay? You want to have win rate and a good positive P&L. This gives you both. So now, what's the next line? Well, the 10's already been tagged. The 20 up here. So if anything above, so I'm always asking myself, what's the next line above? What's the next line below? What's the next line above? What's the next line below? Next line above this one, I'd have to watch to where price finally came over here. Next line down here that hasn't been touched would be this blue line right here. That is this trade right here. So now we take this trade right here. First touch, first pullback to the next line in order. Next line in order after the green line, which has already been touched a couple times. First touch, 8, 10, goes to the opposite, 8, 10, and 12. But like I do, it almost always goes, the 15s and more usually take you across to, or a large portion of time, take you the opposite 10. So now I would have gotten, right, somewhere if I legged in here to here, I got 20 points. Okay, that's cool. I'll take 20 points. Now, here's an interesting point. It's after 725, and my green line, which is the 10 bull line, is the same thing as the 10 bear line, which is pink. Pink and green. Just remember, the 10s is the lime green and the commit it to memory. The pink is the 10 bear. The lime is the bull 10. And then you can just kind of help yourself count after that if you have trouble with it, or you just look over here on the other side. But if you are looking to the left because you're trying to decide what's the next line in order, sometimes I do widen the screen out because I want to look left to see if it's been touched already. Okay, so for example, if I'm looking at this purple line and I'm like, has it been touched already? I'm over here. I'm like, has it been touched already? I got to be able to look left to where it started to see if it's been touched yet. Same thing here. This pink line ended, got to the purple line, got to the 20 line, the 15, the 20. Now I get a new 10 line, a new pink line. I'm after 725, so I can take the first touch of the bear 10 line. So now I'm going to get into the first touch here. All right. Where's my stop? My stop is at 12 points. Okay. I take the first 8 or opposite 4. That's 10 points for me. I bounce back. Now, here's the question. This is a tough one. If you go to 8 points, that's all you're going to get. Because now it's going to bounce back to you, because at that spot, where did you bring your stop? To this line right here. So now it's just barely going to stop you out. And that's okay. Don't let the fear of missing out make you move the stop. Now, it's unfortunate because where did this trade go? Well, it went down to the next line after this one, which is where we're looking for the next trade on the downside, and that's a 42-point move. So would we like to caught those 42 points? Yes. Now, here's another advanced concept. You may have pretty good confidence that after it has bounced 2 or 3 times, you might be saying, man, that's some pretty good resistance overhead. I do think it's going to go down. We have other factors that confluence. Okay, maybe I'll take this 5 points. Maybe I'll take 5 points. Maybe I'll take this one 5 points, but leave a runner, because that's what I try to do, is leave a runner to the opposite 10. Oh, wow, I finally caught the runner. So I may actually leg in myself once or twice off the same line. But while you're learning to prevent this coming against you, please stick to the rules. That's your trade. You may have got a couple points off. You got stopped. Fine. That trade is over. Now, from a counting the lines point of view, I have to ask myself, what's the next line I can take? The next line above the 10 would be the 15. Well, price isn't there yet. So what's below me? Well, the last time I took a trade was down here. That was the 15. So I'm going to the 20. Now, once you go to phase B, you'll go to to the second touch. You'll learn that you can now take the touch again for another 8 to 10 points. But it's a little more of a counter trend trade because we already have the 4 and 6 lines and red candles telling you it's coming down. So this is for advanced, and the reason I don't let you do it at first is because I don't want you getting into taking the lines when it's counter trend trading. We're in a red background with red candles with a red oscillator. We're in a downtrend. Taking counter trends is for experienced snipers. So that's why I don't want you doing the second touch roll. I only want you doing the first touch roll. So this will protect you from any bounces that end up coming back down here quickly. So if it goes boom, boom, you're saved. First touch rule only. Where's the next first touch after this? Well, it's this dark green line. Where does it start? Here. Okay, so that means first touch for me is right here. Okay, now I'm back to, okay, 8, 10, 12. Pulls back. At 8, where do I bring my stop? From minus 12 to the line. See how I never even broke there again on the first touch? Now, if it's me, I get extra 11, 12, and then I look to see if I can get that. So now I have to personally make a decision. Well, where's my stop? It's right here. Am I trailing anything up? Well, I don't have a 6 line yet, so I'm not doing that. So right now it's still break even. So I might be able to jostle this to come back up to the opposite 10. 4, 6, 10. I now got 25 points, and I never risked my lower stop. But for you, whatever, 8, 10, 12 points. Doesn't matter. What's the next line above us? Price comes up to the 10. Did we touch it? Yes. Can't take that one. Price. Oh, this line. Well, there's no fractal developing on it, and I already took it. That brings me down to here. Can I take this line? No. It's not within 3 points, and we already took it. So now I'm coming up here. Already took it. Not high enough. Can I take it? No. So now you've got from 850 roughly until we hit this line here, which is next one, 850 to 04, 05. So now you did have to wait 15 minutes. I'm sorry, guys. You had to wait 15 minutes to take your 1, 2, 3, 4, 5, 6, 7, 8th trade. Okay, can you handle that? 8 trades by 10 o'clock. So now that's within 3 points. Same thing again. 8, 10, 12, move my stop to just above the fractal. Worst case is it comes and stops me out right here, but I already got my 8 and 10 points for sure, hopefully my 12, and I never had any risk of getting stopped out. Do you guys understand this so far? Any questions? Does it make sense?
Hey, I have a quick question. So if you want to leg in on, say, for instance, that first trade you were talking about on when we hit the 45 line,
Yep.
and you leg in on that second fractal afterwards, where you put, is that stop going 12 points below where you legged in, or is it going down with your, like, right under the fractal for the first trade since you already hit your 8 points?
Yeah, good question, and it depends. My ATM is automatically to be 12 points, right? So let's just say I did the first touch of this.
Yeah.
My next fractal is the next line below me, basically. So while I'm writing this up, I'm following the 6. After I legged out of a couple, and I'm looking for now, because it was an impulse move, so I say self. I've seen this 100 times. After a very sharp impulse move, they always give me a first touch of the 6. I don't teach any newbies to take the 4 as a 6 unless Crash says take the 6.
Mm-hmm.
Aside from that, my own personal technique, if I see this impulse move up, I'm looking for a first touch pull back to the 6. My stop stays below 12, or now I'm following the green line because I follow one line below where I'm entered into. Because what happens is when I get a really strong move, it never comes below that line for a long time. All right, so
Right.
let's see. Let's look at this example over here to the left. Here's a really good example,
Yeah, I did that yesterday for a while.
right? If I took this trade here, knowing I was going to come from a spill to an AM low, and I took something, I depends on what you're using to get in. I don't have a line that I'm bouncing off of this, right? Here's another technique for advanced traders. Okay, only advanced traders. If I know I'm going for a turn, and let's say I have a Fibonacci here, okay, on my other chart, I drew a Fibonacci or a price target, and I've hit that price target. Let's say I have a Fibonacci plus a price target plus something else, I don't know, that said my T-map line or my ace line. I'm like, I'm taking that short right there. I don't care what Isnipe says. That's why I run a multi-component system, right? But if I take the trade off of I structure because I had 3 points of confluence over there, and now I take this trade, I might still come over here to the Isnipe section and use the lines to help me follow the trade for longer. I'll use the structural setups on the other side, the Viper line, the Eagle line, the Fox 2 line, the Fox 3 line. I'll use those, but I will certainly look for confluence here. Now look at this move. For whatever reason I took it, or I don't take it, my candles go from green to red. From a technical analysis, I have a right-sided pivot rule, a lower high. I have a third lower high. I have a fourth lower high, and my candles turn red. Oh, guess what? Now I have a 4 line developing. Sometimes when all this stuff adds up in my brain and I'm quick enough to process it, as soon as that 4 line develops, I'll take 3. Where does that line actually occur? That line, or price, when that line develops right there, okay, let's just get rid of that. When that line develops, where is price? Price is actually right here. Because you got to look at where the price is when the line develops. So now what I may do is I might just buy one. I've already tagged the 6 line several times. I've changed colors. I'm going to a red background. Well, actually, you're not at a red background yet because you just see it. I go purely off the 4 line and the color of the candles and my experience from what's happened in the last 5 minutes. To me, I might take that trade and let it ride down. If I do something like that, I'm first going to follow the 6 line and I'm going to leg out of at least a couple, depending on how much I leg in. Now, What I like to see is a pullback to add to this sell position. But I know that sometimes when I get a flash down like this, all right, I will sometimes follow the next line in order, which would be the 10, because I know I'm going to get a pullback to the 6 that I'm going to try to short again. But I know it may overshoot just a little bit because it's such a fast move down, it's a fast move up. So sometimes it'll overshoot. So sometimes I will follow the 10 line, not the 4 or the 6, just depending on the situation. In this case, if I just followed my stops, so I got in here, and let's just say we went to 12 points, okay, this line right here. Okay, I'll be at 12-point stop from right there, roughly. Right now, I'm in no fear because I'm in a topping pattern, and if it did come and bounce against me, just as fast as I could hit that buy button, I could hit that sell button. Now, there's something you'll learn about me is I am way not afraid to go buy and then 10 seconds later go sell. I'll get out of a trade if it's going against me what I thought it was going to do because I preserve my capital that way, and then the next time I find a valid trade setup, then I'm going to enter in again. And that trade setup could be 20 seconds later, it could be 30 seconds later. It might be as fast as 5 seconds later. I don't know. But let's just say for this example, I used all my technical analysis. I said, yeah, man, we're going down now. And I follow the next 10 line. So the line comes here, it goes level, horizontal. Here's my stop. Next horizontal spot, right here. Here's my stop. I probably would have legged out a little bit here, legged out a little bit here, kept a core position according to my leg in, leg out plan. On the first touch, first pull back to the 6, what do? I buy it, I sell it again. So let's just say I only had 1. Now I add 3 more, I got 4. I'm following. Where's the next line down? Here. I'll leg out 1 here. Following. If I did nothing but put my stop at the next 10 line, I now then rode that down from somewhere up here where I got in, down to the 10 line, and I was able to get 36 points out of it. But while that happened, I was legging out 1 here, 1 here, 1 here, 1 here, trying to leave 1 runner. If I ran out of bullets and I'm here and I have 1 left and I'm staying below the 6 line, I'm not going to get out. I'm not going to get out until I see something that makes me get out, so that hopefully now I can take this and turn it into a more profitable trade, because I'll look at what's happening down here. I'll look at structure. I'll look at eye structure. I'll look at time chart, and I'll say, where am I going? But if I just follow that all the way down, I get to keep legging out all the way. And on one of these lines, I'm not going to leg out because price has been staying below the 6. 4. And if I see this just constantly staying before the 4 and the 6 line the whole way down for 40 points, that is a bearish momentum. I have no fear of getting stopped out. Even if I got stopped out, I legged out here and I had nothing. And then I came and I added here and I sold short here. Where's my next line I would go? Well, I'd go 12 points and then I'd follow the next line down. So then I would be able to get, from that 6 entry to here, like 25 points or so. So various techniques that as you get used to looking at the lines, I call out quite often, we're doing nothing but the 4s and the 6s, 4s and the 6s, 4 and the 6s. If I'm already in a position and I'm saying, only hitting the 4s and 6s, only hitting the 4s and 6s, or only hitting the 4s and 6s, I don't leg out of my last one. I want to keep a runner as long as I can. If it's staying below 4-6, 4-6, 4-6, I'm going to hold that thing. If I'm holding to the 10 and now I come back to the 6, I will probably get out of the last one somewhere in here. After it came down here and bounced out a little bit. If I see the right-sided pivot roll, okay, here's more technical analysis. I kept 1 runner and I've come all the way to here, right? And now I get a right-sided pivot roll off of a 45 line. I'm not going to hold that anymore. I'm done. Because now I'm going to look for the next place to short or the next place to buy long. So if I got out down here, man, is this an entry? Yep. Well, now where's the next place for me to get in? Well, it would be up here. So I legged out somewhere down here, and now I had to wait here, but I just got, 30, 40 points out of all that. Now I take this, and I get another 30 points. Opposite 4, opposite 6, opposite 10. 29 points. 20 points. That's the way I trade. Connie, this is for you.
Crash real quick. I gotta jump off. So thank
Yep.
you so much for this. Super helpful.
Yep. Okay. You guys have a good
Have
one.
Good one.
Yep. Sounds good. Connie, I want to leave you with the opportunity to ask some questions.
Well, I that was a great explanation. I mean, I'm totally understanding looking at this chart now. I mean, of course I don't. It's a lot of information, a lot just to take in one sitting.
Yep.
But it makes more sense. Yeah, just following those I get yeah. So
Well-
I can see how it just takes practice to
Yes.
be fast enough to get in, move that stop loss, watch it, get in, get out, and then watch the lines. It's just gonna take some time.
Yeah, it will. That's why I tell everybody, learn the rules so you have them in your head. Then give yourself 2 weeks. 1 week of at least sim trading. 1 week if you feel good after it. Maybe you need 2 weeks of sim. That's okay.
Mm-hmm.
But what I want to try to do is get you to stick it for the long haul, because I think if you take the time to learn it, it will get you where you want to go in profitability. And of course, I will be there during the day saying, I'm taking this trade. I'm taking this trade. I'm taking this trade. I'm taking this trade. Hold it. Hold it. Hold it. Buy this pullback. Right? So I will continue to give guidance every day, like you heard me doing today, on all the different trade setups. And then, if you it's not for you, then that's totally fine. This is not going to be for everybody. That's for sure. There will eventually be somebody that this system's just not going to jive with. And, I don't know who that is, but at this point, we've had pretty good success in the room. So.
Mm-hmm. Yeah. Yep.
All right. I'm going to send everybody this link, and then I will send 2 other video links that are similar to what we just did. And you can watch them whenever you want as added feedback to your brain.
Okay.
Matt, anything from you that I missed?
No, I think the only thing that I would say too is, profit is profit, right? I mean, one of the hardest things that I struggled with early on was, it's like sometimes you'll see a trade, that'll maybe bounce off of, say for instance, a bull 15, okay? And you take the trade and it's like, boom, it immediately goes into profit. You're like, man, my entry was bad, or, I wish I would have gotten in sooner. And you have to remember that the system, as Kelly was saying, is based off of an algorithm. And so when you understand that it's based and built around key points in the market where there are what I call like inflection points, right? So price retraces down, it makes a fractal and bounces up. That's an inflection point. And I've done a little bit of a deeper dive into like the fractal studies, and I actually had done some training with the daughter of the gentleman that had actually built out the fractal system. When you understand that it's an inflection point, and yes, Kelly might be able to get in earlier because of his self-study and learning and doing this for years and years and years. But maybe for us new people, we get in 3 points higher because we want to see that bounce point happen. You have to remember that it's a statistical probability of going from the pivotal point, which is the fractal, 8, 10, and 12 points. So regardless of where you enter in, whether somebody else in the room gets more points or you get fewer points, profit is profit. And so when you get that profit, you need to take it, be happy with it, and just know that statistically the odds are in your favor that over the course of the entire day, or in most cases in 2 to 3 hours, you'll end up ahead long term. And again, way back when we first started, Kelly had mentioned, if you make 1% a day, you're in the top 3% in the world. And it's very easy to do with the system because it's built around order flow, it's built around market participation, and it's built around algorithmic trading. And so those little inflection points are super important regardless of where your entry is, because the 8, 10, and 12 points is a statistical odd of reaching those levels from the pivot point. And that was a thing that took me a really, really long time to get like really cemented in my head. And maybe that was just me, but myself personally, when I really internalized this is a statistical probability, you'll find that you get very unemotional, which if you've been around trading for a while, the emotional side of this business is, I would argue, more than 50% of your success as a trader. Because if you take wrong positions, you move your stops, you break rules. We talked about in the room too, some, certain things are written in blood, right? Meaning that it is a law that we do not break because there is a reason we don't break it, because it will hurt you in the end. And when you really cement yourself in the statistical advantage of what the system has, you get very unemotional. You go, okay, I got some profit. Might not have been as much as I wanted, but wait for the next opportunity. Because the next opportunity, if you do it correctly and you learn more and more over time, you'll be able to take those trades where you can trail your stop down with the 6 ATR, with the 10 ATR, and pull out 40, 50 points in a trade. And those losing trades, when they do happen, which are few and far between, but when they do happen, you kind of go, oh, okay, no big deal, take the next one. And when you can get to that level, like, your success skyrockets, like it really does, because you're unemotional, you're factual and statistical based, and you then really have the system down. So it does work. I know it's a lot. I can, if you feel like you're drinking from a fire hose, I relate. The more you're studying this, the more you're in the room, you'll learn it, and it will sink in over time. So.
Yeah. Yeah, it's definitely a different strategy, or it's just a totally different way to look at it. And when you first started talking about setting that three strategy of the 8, 10, and 12, I thought, well, based on what I've learned so far, and I've only been trading since February, but I just thought, well, how do they make all this money when, if you're setting the strategy to just be that, so, but now after you go through the whole explanation, it totally makes sense.
Yeah. Well, and that's why, I mean, again, you'll learn this first and then you'll go to the other stuff. But there is, so much more that we add for confluence to this from this side over here. So, I mean, for example, let's just say we're going from one trade to the other, just briefly. So let's look at this chart right here. From, where's that first 45 at? Let's see. Okay, this trade right here. Okay, occurs where? Oh, it's too far over on this one. Let's go over here. It's at 7.
While he's pulling that up, I will caveat this with, so the when I passed those $250,000 accounts in one day, I was trading the minis. I was not trading the micros. The reason I was trading the minis is because I really internalized what those lines mean, and I practiced a ton with them. And so, you're not going to pull a $17,000 day trading the micros. However, my average that I was experiencing when I was trading the micros was somewhere around $500 to $700 a day. Go ahead.
And how many micros were you trading when you did that? Just the 3?
I was doing, 3 to 6 was my average. And if it was a trade that I had real conviction in because of the structure, maybe we were hitting a turning point where we were looking to make a new high, I would add and I would scale in. but 3 to 6. There were rare cases where I would go to 9, but I had to feel really confident in 9. But there was enough opportunities that 5 to 700 a day was kind of an average for me. But again, when you scale that over, that's where when yeah, and I'm digressing a little bit, but when I would watch people prior to talking with Kelly that were trading micros, I was like, so you're making $2 a point? Like, that's kind of lame. Like, okay, $2, what does that get you? However, when you do it over a trade copier and you have 10 of these accounts and you're making 5 to 700, then it really adds up in a hurry. And then once you kind of like learn the system and you can advance over to minis, that's where you really start to see the P&L increase. But there's baby steps along the way, right? There's like benchmarks and mile markers that you have to hit to get there.
Yep. Cool. All right. Well, we've been going on for an hour and 50 minutes, so I want to call it a night. I appreciate you guys coming. We'll have more academic sessions or education in the future. Watch the videos that I send to you maybe over this weekend. Absorb it, and then just ask questions during the day and give it some time to work.
Little nuggets all the time.
Yeah.
Thanks.
You betcha.
Yes.
Okay.
Thank you so much. Appreciate it.
All right, you guys have a great night. We'll talk to you soon.
Anyone?
Okay.
All right.
Bye-bye.
See you guys. Crash out.